Hey everyone, as a part of my research to identify high growth companies, I recently came across a very interesting name. Company name is Zaggle Prepaid Ocean Service Limited. Company's management is guided to double its revenue in the next 2 years by FY26. And that really caught my attention. I mean, there must be something unique about the company that can double its top line in just 2 years. And when I quickly checked this company, I found that ace investor Mr. Ashish Kacholia is already holding this company in his portfolio since the IPO in September 23. And what is really interesting is he has actually increased stake in the company. Not only that, in the latest September holding, both FIs and DIs have increased stake in the company. And DI stake is up big time. This really intrigued me to study the company in detail. And I must admit, they have a very unique business model. So in today's video, we'll deep dive into Zaggle's business model, future growth prospect, financials, valuations, and key risk and growth thesis. Needless to say, the purpose of this video is to share my knowledge with you all. This channel is my initiative to discuss potential businesses that can grow big. But whether you should invest or not is totally your decision. Because I strongly believe that to create long-term wealth in stock market, you need to have a fair understanding of the business before investing your hard-earned money. Stock buying based on tips is not really sustainable. With this, let's get started with the video. Zaggle is a fintech company that operates in a SaaS-based business model. So SaaS is software as a service. Basically, it provides spend management solution to business that helps them in managing employee expenses, vendor payment, and channel incentives. Now let us simplify Zaggle business. So company offers 3 major products and services at the moment. First is Propel. This platform enables corporate to create and manage customized reward program, track performance, and distribute rewards seamlessly. Today, many companies offer reward program for their employees based on their performance. For instance, it could be achieving sales target, completing projects, or demonstrating exceptional customer service. Or it could be rewards on festivals like Diwali, New Year, and so on. That's where companies can use Propel platform to create and manage these reward points for their employee. These reward points can be redeemed by employees using various options. They can either buy the vouchers of more than 300 brands like Amazon, Shoppers Stop, Tata Click, and so on. Or these rewards points can be credited in the prepaid card that can be used for various purchases. So Propel is the first offering. Second is Save. So it's a comprehensive solution for managing employee expenses and reimbursement that helps companies streamline process, improve efficiency, and reduce leakage. So earlier, the challenge was that employees had to pay the expense out of their pocket upfront and then save all the bills and submit them to the HR department to get the reimbursement. However, Save helps in streamlining these processes. It offers a mobile application that enables employees to scan and submit expense bills in real time. Employees' managers would get the notification and can be approved instantly. Zaggle offered 2 models for handling employee expense through Save. First is reimbursement to Zaggle prepaid card. So employees can incur expense using their personal payment method and then submit bills for reimbursement. Once approved, the reimbursement amount is credited to Zaggle's multi-wallet prepaid card. Second is direct spending through Zaggle's corporate credit card. Employees can be provided with a corporate credit card issued by Zaggle in partnership with bank. Employees can use the card for business expense and then the company directly settle the credit card bill. All expenses are tracked and recorded on Save platform for transparency and accountability. Third platform of the company is Zoyer. This platform is designed to streamline and automate various aspects of business spending, including focus on vendor payment. So earlier 2 are focused on employee and this one is more on vendor payment. This allows businesses to seamlessly manage vendor payment, track expenses, and gain valuable insight into their spending pattern. With these 3 platforms, Zaggle offers a holistic spend management solution to corporates. I hope we got a fair idea of their product offering. This slide shows the omnichannel technology offering that include co-branded cards with bank, mobile app to manage spend, multiple banks and network partner, and a dashboard to manage reporting and analytics. Now the question is, how does Zaggle earn money? So there are 3 major sources of revenue. First is software fee. Company pays a subscription fee to Zaggle platform for using their software. Second is program fee. Zaggle earns a commission on transaction made using the prepaid card issued through the platform. And third is commissions on voucher redemption. When employee redeem their points for a brand voucher, Zaggle earns a commission from the merchant partner. For example, if an employee uses Shoppers Stop voucher and redeem it, Zaggle earn a good commission from Shoppers Stop. As far as revenue breakup is concerned, this slide shows the clear picture where 31 crore has come from software fee in FY24. This is in million, we are talking in crore. Then program fee contributed 321 crore and Propel platform has contributed 422 crore. Now after I got a fair understanding of its business model, my biggest question was, there are already many co-branded cards in the market. what makes Zaggle prepaid and credit card special? In other words, what is the moat of Zaggle? That's why when I dig deeper, I found my answer. The biggest difference between Zaggle card and another co-branded card is that Zaggle cards are tightly integrated with corporate's ERP system, whereas other normal credit cards are not integrated with corporate's ERP. What it means is it gives a much higher control to corporation in managing the expense. For instance, let's say there's a project for which the company has set a fixed expense budget of 500 crore and within that travel expenses say 50 crore. So that limit would be set across Zaggle cards, and then the manager can also access all the analytics related to spending, like which category has the highest spending, how is the spending pattern across cities and so on. These insights are extremely useful for corporates to make efficiently good decisions. While all these things are good for the business, there's one catch that you must know before taking a call on buying this stock. This is the incentive and cashback cost. At the moment, to increase the adoption of their cards, Zaggle is giving good incentives and cashback to the employees. It's kind of a discount, but that is an expense for the company. Last year during the IPO, companies raised around 300 crore for the retention of client. This money would be spent over the next 3 years, so good growth would come because of these incentives and cashback. Although please note that Zaggle is a profitable company. We'll discuss financials shortly. Management has clarified that going forward, they intend to reduce these incentives. But for now, they are on growth spree and do not mind spending money to acquire customers. So it would be very interesting to track how a company manages these incentives and what happens to growth post incentives are reduced. Now let us look at the future growth drivers for the company. So first growth driver is India's digital payment boom. The increasing adoption of digital transaction across business and consumer creates a favorable environment for Zaggle's spend management solution. Second is increased digitization and automation. Companies are increasingly seeking solutions to streamline their expense management process, vendor payment, and employee rewards and recognition program. Third driver is strong partnership and collaboration. Zaggle's strategic partnership with leading banks like ICICI, Bank of Baroda, IndusInd, and payment network like RuPay, Visa, MasterCard plays a crucial role in its growth. These partnerships provide access to a wider customer base and enhance distribution capability. Clearly, there are multiple growth drivers for the company, but one key factor that would play a crucial role in company's future growth is customer retention and expansion plan. Currently, Zaggle has a very low customer churn of just 2%. It means 98% of customers continue their journey with Zaggle, and every year it is adding more customers. So every year its customer base would continue to grow. That would play a very important role in the growth. On top of this, Zaggle has the opportunity for cross-selling and upselling across its platform. Company is also continuously innovating to launch new products and platforms to expand the use case within spend management. That would again play a key role in company's growth. Last very important point to understand is its highly scalable SaaS-based technology platform. There's a reason why I like SaaS business. In fact, I already hold a few SaaS business company in my own portfolio that I share with my close community in my weekly video series. That include one exclusive video per week where I discuss stocks I am adding or selling from my portfolio, along with closely tracking quarter results of more than 200 companies in an Excel sheet along with my comments. For more detail, you can explore my website or join button of this YouTube channel, but please note that the series is only for long-term investor. Now the reason why I like SaaS-based business is because SaaS companies have a fixed investment cost on building the software. However, as their business grows, revenue also grows, but their expenses do not grow in that proportion because their biggest expense is software development, which is already done. That is the reason as the business expands for SaaS companies, their operating margin expand and so is their net profit. Hence, these SaaS-based companies would always command a high P at the early stage. But as they grow, their earnings would expand and P would reduce. Overall, Zaggle management has guided that their revenue should double in the next 2 years. In fact, a couple of days ago, management has mentioned that they are planning to raise 950 crore to fuel their growth plan. They even intend to enter into the US market. So they may also use this capital for inorganic growth via acquisition. Now let us look at company's financials, shareholding pattern and valuation. If you look at company's revenue, it has grown at an exponential rate in the last few years. And going forward, management has guided that the revenue would double in next 2 years by FY26. All the company's margins have fallen, but that's mainly because company's expenses has increased to grow its top line. Company's net profits have also grown at fast rate post-COVID. Company's ROE and ROC are also decent. As company would achieve economy of scale, profitability should increase. Debt is also negligible. Only catch is that currently company is negative on cash from operation. Overall, it's a high growth company, but going forward, we need to track its earning and cash flow. As far as valuations are concerned, at current level, it commands a market cap of around 5,300 crore with a PE of 90. As I mentioned, it's difficult to gauge the valuation based on PE, and as it's a very high growth business. We can look at price to sale, which in my opinion is decent. On shareholding, promoter hold 43.8% stake. FI stake is reduced, but that's because some of the FIs like Venturist are early stage VC investor that invested long back and now they have book profit. When they reduced their stake, DI slightly added it in June quarter, but look at the buying in September quarter. DI has increased stake from 5.4 to 10.7%. Public holding is currently 39%. That includes few HNI investors, including Mr. Ashish Kacholia, who has increased stake in the company between September 23 till March 24. Now let us look at the final part, that is the key risk in company's growth thesis. So I have identified 6 key risks in company's growth thesis. First is seasonality risk. Company's business says that its significant portion of revenue comes from H2, that is third and fourth quarter. Q3 is due to seasons like Diwali and end of season sale, and Q4 is due to end of financial year where employees have to use their reward point before they expire. This dependence on specific period for large portion of revenue pose a risk of fall in consumer spending during these critical period due to any negative sentiment. Second risk is reliance on incentive and cashback program. As discussed before, currently Zaggle allocate a significant portion of its revenue towards incentive and cashback program to encourage card usage and attract new customer. While these initiatives are essential for driving customer acquisition and engagement, particularly in the prepaid card segment, they also represent a substantial cost for the company. Hence, the effectiveness of these programs in driving sustainable growth and potential impact of reducing these incentive on user behavior would be a key area to monitor. Third risk is competition in the fintech space. The Indian fintech landscape is highly competitive, with many players trying to capture market share in digital payments and spend management system. Hence, Zaggle has to continuously innovate, make strategic partnership, and do effective marketing to attract and retail customer in a crowded market. Then fourth risk is regulatory changes and compliance. As a player in the financial service industry, Zaggle is subject to various regulation and compliance requirements from RBI. Fifth risk is dependence on key partnership. Zaggle business model relies heavily on collaborations with bank, payment network, and merchants. The success of these partnerships is crucial for Zaggle to expand its reach, offer a comprehensive range of services, and maintain its competitive advantage. And sixth risk is economic downturn and its impact on spending. Zaggle business performance is inherently linked to the overall economic condition and spending pattern. An economic downturn or reduced customer confidence or corporate spending cut could negatively impact transaction volume and consequently impact Zaggle's revenue. So on one side, while the business is looking quite promising, on the other hand, it has its fair share of risk that you must keep in mind before investing your money. Overall, Zaggle is a very innovative business model that operates in the intersection of SaaS and fintech business in the area of spend management solution for corporates. Company has been growing at a very fast rate and management has guided to double its revenue in the next 2 years. Considering the increasing adoption of digital payment, companies are increasingly seeking solutions to streamline their expense management process, vendor payment, and employee rewards and recognition program. That's where Zaggle is in a sweet spot. Since it's a SaaS-based model, it's a highly scalable business, and as the business would grow, companies' margins would expand and so is profitability. So on one hand, while this business is looking quite promising, on the other hand, it has its fair share of risk that you must keep in mind before investing your money. In my opinion, it's a high risk, high reward kind of game only suitable for high risk takers to consider allocating a small portion of their portfolio in this company. Now tell me in the comment, what is your take on Zaggle? Is it worth investing the money or not? I hope you'll find this video useful. I'll see you next video. Till then, take care.